There has never been a greater time than now to invest in the Metro Detroit area, and there is no other investment firm better qualified than Platinum Real Estate Holdings. With 40 years experience and over 1,000 homes sold, let Platinum Real Estate Holdings assist you with the purchase of a city-certified home of the highest quality, turnkey properties, screen renters, yielding instant cash flow. Well, what are you waiting for? Call or visit us online today. Welcome to the weekly recap for the week of June 27th. In today's recap, we will discuss Dan Gilbert's Detroit Brush Park real estate vision. And lastly, we will share how you can tell the difference between bad and low-income neighborhoods when considering a real estate investment. This week's recap begins now. Dan Gilbert's Brush Park plan offers a bold new look in Detroit, and the plan will break ground in just a few weeks, an article from the Detroit Free Press reports. It was just May 2015 when Mayor Mike Duggan announced that a Dan Gilbert entity, Brush Park Development Company, had won the right to redevelop the extensive site, which is bordered by Edmond Street to the north, John R. to the west, Brush to the east, and Alfred Street to the south. Not since the Lafayette Park project a half-century ago has Detroit seen a residential development as ambitious as Dan Gilbert's Brush Park project. For one thing, the project will have about 100 for-sale units and about 300 apartments on 8.4 acres just north of downtown, and will be offered at the top price range of any rental or for-sale property in the greater downtown when it opens a year or so from now. The other thing is, instead of duplicating the peak roofs, gables, chimney stacks, and bay windows from days gone by, Gilbert's team opted for a bold, modernistic look. This will be unlike any residential project in Detroit. The clearest analogy may be Lafayette Park. Built in the 1950s, they introduced sleek glass and steel buildings with flat roofs and great expanses of glass married to a thoughtful park-like plan. It created something new in Detroit and remains among the city's most successful districts. Gilbert's team indicated the plan is to usher Detroit into a new era of residential design that will set a standard for the quality of materials and urban planning. It will do so by integrating the new modernistic buildings with 4 of Brush Park's historic Victorian mansions that are being preserved and renovated. To delve more into the neighborhoods, you can describe them as eclectic. The modernistic concept, in this case, won't mean a series of look-alike flat-roof buildings. No, sir. Gilbert's team has worked with 5 architectural firms led by Detroit-based Hamilton Anderson Associates to produce a variety of styles that differ greatly in height, materials, and overall look. The designs include multi-story apartment building to 2-story carriage houses to duplex, or buildings featuring 2 apartments, one above the other, with extra tall ceilings. Materials on the exteriors of various buildings range from glass and steel to brick and cedar. The project design has received rave reviews. The Congress of New Urbanization and Architectural Planning held an annual conference in Detroit last week and awarded the project its grand prize for design. The Gilbert team sought to provide a setting where residents can age in place, renting an apartment when young, and buying a carriage house when starting a family, and finally retiring to an apartment for senior living. To provide needed services, the project also plans up to 20,000 feet of retail and commercial space, a health center open to all residents, and multiple parking options. Besides Hamilton Anderson Associates, other architectural firms designing portions of the project are Christian Hertanini Architects of Grosse Pointe Park, LOHA of Los Angeles, Merge Architects of Boston, and Studio Dwell of Chicago. Detroit business and civic leaders investing in the Brush Park development include Marvin Beatty, Sam Thomas, Pam Rogers, Darrell Burks, Friedman Hendricks, and Gilbert Bedrock Real Estate Services. Gilbert, when winning the project, committed that 51% of construction workers would be Detroit residents, and 31% of overall construction dollars would be spent with Detroit-based contractors. Here's a recap of cool facts about the Brush Park project. Number 1, multiple rooftop terraces create the urban equivalent of backyards and community garden. Number 2, the plan is to allow residents to age in place, moving from rental apartments to family-style condos to senior living. Number 3, a park-like greenway traverses the project as a recreational amenity. Number 4, modern architecture creates a bold new look for Detroit's revival. And finally, number 5, lots of retail and commercial space built into ground floors of some buildings. The project final cost is not yet confirmed. Next, do you know there is a difference between low income and bad neighborhoods? The term bad and low income are used interchangeably out there, but it should not be, because there are definitely low income neighborhoods that are good neighborhoods to invest in. Here are ways for you to separate the two. Number 1, don't trust your eyes, or don't go with your first impression. In real estate investing, play strictly by the numbers. This means looking at statistics, prices, and environmental factors, not at the fading siding or broken windows and missing shingles. Next, high crime can mean bad or just low income. Every neighborhood has a few different crime rates. For the purposes of investing, you want to pay primary attention to property crimes, as they're going to affect the security of your investment. But far more important are the quality of life crimes like vandalism, littering, and public urination. Why? Because those crimes indicate that a neighborhood isn't just desperate, it's also self-loathing. The people who live there are not just committing crimes to get by, but they're doing it because they simply don't care about the neighborhood. On the other hand, a neighborhood that has prostitution, drug dealing, and other money-making crimes, but doesn't have quality of life crimes, isn't necessarily bad. It's just low income. And low income, but good, there's a potential for a value investment. Again, genuine war zones where the police don't even visit if you call in a vandalism report, yeah, don't buy there. Another one of the most important ways of separating a low income but good investment neighborhood from a just plain bad neighborhood is by looking at what is going to happen to the neighborhood over the next few years. For example, buying a home in a neighborhood where there is currently a large lot being cleared for the addition of a Costco is significantly better than buying one where the local Walmart just moved out. One more subtle way to pick up on a just starting to grow neighborhood is to look at the days on the market of homes that are selling in the neighborhood. If the average days on the market 6 months ago was 90 plus days, but today is down to 45 days or less without a rise in property prices, it's a good time to buy. A downward trending days on the market report is almost always a sign of soon to rise property values. Low geographic mobility. Low income people in low income neighborhoods tend to move less often. Look up the net migration numbers in your chosen neighborhood. If they're very low, below 9%, you may be able to take advantage of a good stay and pay tenant. This can be a genuine downside if you land a problem tenant who simply won't move until the police show up and physically drag him away. That's a lot of lost rent and probably a lot of vandalism damage you'll have to repair. But statistically speaking, the best low-income tenants have a reliable, if low, source of income. Often they're retired or disabled and collecting stable monthly benefits. Other than the occasional late payment due to something like an unexpected car repair, these tenants can handily turn low income into a benefit. Investors looking for high cash flow can definitely find a killer investment in a low-income neighborhood because rents tend to move less than property values do. So it's relatively easy to buy a home that costs 50% of an identical home in a neighborhood over and charge only 15% less rent. The end result is that you can set up a high cash flow investment with relatively little investment. One final thought. There's one catch of all this that novice low-income investors can easily miss. If the home you're buying is in a critically low-income neighborhood and there's not currently a renter, you absolutely must inspect it or pay someone else to inspect it before you buy. The reason why is simple. In many very low-income areas, an empty house is almost immediately stripped of everything inside that can be sold, including plumbing, HVAC, water heater, appliances, and basically anything made of metal or worth a dime on the street corner. Even a seller who offers written evidence of an inspection on Monday can end up with a home stripped by Wednesday morning, unless someone is physically living there and you buy the lease along with the property. In short, you don't need to be scared of investing in low-income neighborhoods. You just have to be aware of when low income and bad don't match up and prepare to take advantage of how the two don't overlap. Investors, do you invest in lower income areas? We'd like to hear from you. Well, that's this week's recap. Did you find this recap helpful? If so, please let us know in the comments below. Thank you for listening and have a great day. This has been your weekly real estate investment news recap. Did you find this recap helpful? Please like or comment below this video to enter to win a free copy of our ebook, The Ultimate Real Estate Guide for Residential Real Estate Investments. You can also subscribe to our channel or go to our website to receive the latest in real estate news. Our website also affords you the opportunity to view our latest turnkey properties.